All right, everybody, welcome. Doug McKay on the 20th of July, 2012, looking at a chart of the S&P. This is a daily chart. It is also a still chart I put up to the managed accounts last night on the blog. And we'll go through a lot of these lines here. For the record, we have the overall trend as long. Not an all-in situation. Seems to be a lack of leadership, certainly a lack of volume. But to the credit of the bulls, we are making a series of higher lows. Here's a low here. Here's another low here that's higher. Another low here that's higher than the previous low. And we are also making a series of higher highs. Also to the credit of the bulls, we are above this blue line here, which is the 50-day moving average. We are also, that's a simple moving average. We are also above the 20, 30 still and 50-day EMA. So everything looks good. This could have just been a pullback today, although the volume was heavy. We would kind of sit up in our seats if 1350 broke. This became more bullish over the last day or two because we did get above this left shoulder here. If we're looking at a head and shoulders, where this would be a left shoulder, head, right shoulder. It did also happen on an increase in volume. The fact that we came back down and are looking to test the most recent breakout area of these highs of around 1360 is somewhat normal. If we were to break this trend line that will extend here, and if we were to break any of the moving averages, that would get us cautious either to hedge or start to take some of the long position off. So choppy times, very similar to last year. We want to make sure we take each signal because you never know when that signal is going to continue to go up or continue to go down. All right, so let's clean this up a little bit. We did get above this downward sloping trend line back when here, right? Unfortunately, this was a huge day a couple weeks ago. But you have to get in. And then we had this move down last week, and then we had a recovery last Friday, and then pretty good moves all week. But we do have the overall trend is long. Why? We got above the 50-day moving average. A couple weeks ago, we got above the downward sloping trend line. And now we are above this left shoulder here of around 1360, 1357 in that area. Could we make a run towards 1400, test the highs of 1418, 1420? For 2012, yes. But again, if it starts to break down here, like I just said, we have to take that signal. Now, if we get rid of some of these lines, we're going to put another kind of different looking picture on the chart here on the fly. Actually, you know what? Let me keep that one on. Let's take this off. We could be looking at a rising wedge, which when it gets to the top of that wedge, if it gets to the top of that wedge, would be a bearish signal. And here's what it looks like. Where we're in this rising channel, there's a couple different ways we could move this. We could even move it here or here, but pretty much the same outlook. So if we get up to this 1400 level before breaking down and before a trend change, we will either look to take some profit or look to hedge there. But again, if we break down below this channel without getting to the top, we would get defensive. And right now, that number with the lower rising trend line would probably be around maybe that 1350 mark. All right, but we do have the overall trend as long. All right, so we're not going to spend a lot of time on a lot of different charts tonight. Keep this kind of simple. And let's take a look at the dollar. This is a trend line. I don't know if I put this chart up earlier in the week. I might have just drawn this in and not put the chart up. I think I did on the blog. Very gappy in here with the open space. But again, with a close above this high, there's nothing wrong with this trend in the dollar, especially if equities continue to break down. And if we look pretty much at the reverse of that when we look at the FXE, the Euro ETF. So we get above this area of resistance, which we almost did today. That's very bullish for the dollar. This would be a tight stop. I'd probably go no farther back than the 50-day moving average, which is the blue line, around 2270. You could even get a little tighter. Sometimes when you get too tight, especially if it's a hard stop, it's going to become a target, which would be just under this low of yesterday's candle. I think we did put up a chart of the Muni Bond ETF MUB. This is broken out. We did also, I think during the week, put up a chart of the Nuveen Muni. So this is something that we're looking at. Again, one of the reasons we don't see the market as an all-in situation at this time is not necessarily price, not necessarily technical reasons related to price, but more volume. And when we look at the internals of the market, there's a lack of leadership still. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. Enjoy your warm weekend. We'll see you next week. Thanks.